Come on.
Well, we're recording? No.
Yeah, we're recording. We've been
You see
recording.
the
You see
counter
the timer
counting,
going?
bro.
He's
looking at Jacob like, cut
you're
it out,
burning
cut it
cash
out.
right now, Omar. You're burning cash. Get going.
All right.
Oh shit.
Start.
Yeah.
Yeah.
All right, everybody. Thank you so much for joining us for another famous episode of
Bam.
I love when he turns it on. You know.
Yeah.
He went
like a switch.
It's a welcome to another episode of Brokeassmillionaires. We forgot what episode number it is, so we're going to pretend like it's episode number
12.
What? So it is.
That wasn't even practice. I
That was
swear to
actually
God.
pretty good.
That was pretty good.
Rabieh said, "What is passive income?" And then Elliott said,
No, the other way around.
"The other way
like,
around."
what?
Yeah. Elliott said, "What is passive income?" And Rabieh said, "It's when you
Make money
make money
passively.
passively."
It's exactly what it is. I don't know why you guys are laughing so much.
Yeah,
But-
so I'm pretty sure when you're like defining something, you're not supposed to use like it.
But
in
it was
the
something that's so
definition.
self-explanatory. I'm sorry, but like, there's no other way.
So maybe we're going to talk about that.
Sure, you want to talk about
later.
passive income?
Let's
Okay,
let's do quick update,
Quick update. You wanna do
quickish
market?
update. Let's go a little bit,
Let's go to
a little bit into it.
Okay, so we are mid-Feb 2024.
Yeah.
And let's use some anecdotes and then we'll get into some stats after. So I'll start with you, Elliott. What are you seeing in the average markets right now in terms of real estate? What's the activity that you're seeing?
I would
And
say
then also, what the hell happened to your foot?
Oh, I'll deal with the foot later, but
Okay.
I
Those
would
are the-
say maybe the last week and a half, let's just say since the beginning of February, definitely we've seen a little bit more activity. I would say maybe not on the high price points. Definitely it's still starting to stir, but majority of the action I think is coming from that, let's say 600 to 800,000 kind of range.
Yeah, I'm seeing stuff around the 400-500 go bananas,
Yeah.
Yeah.
Me
right?
too. But also at 600 range, I'm seeing a lot of.
Multiple offers,
multiple offers, yeah.
a little bit
yeah.
over asking.
I was
wouldn't
gonna ask
say-
you: are you finding things are going for over asking? Because I am, but not as much.
Yeah.
Well, I
think-
was looking at like the data and I feel like there's a bunch of stuff going above asking.
Yeah.
But then when I look at the data, it's like if it goes above, it's like 5-10K.
Yeah.
I saw one that went 112,000
yeah.
or something, 111, yeah. But that was 15 offers, and that was nuts.
Yeah.
And
So the thing is,
unconditional.
on something like that, like a lot of the time you hear a number like 111K over asking, and that sounds like crazy, but I wasn't dealing on that property at all. But
that was crazy. though.
Was it priced below what you think?
No,
it
that was
worth?
a shit property.
Oh, really?
Yeah,
do
I
you want to
actually-
like put addresses and everything
No,
out
no,
there?
I
But what
actually
was-
don't know.
What was the zoning like? Was it zoned where you could?
R1, and it was like wedged between
So
industrial.
then what could they have wanted that property so badly?
It was
that-
wide.
okay.
Okay, and it had a
Like girth.
garage.
As my cousin Bobby would say.
Yeah, but you know, in
Shout
housing,
out cousin Bobby.
size does matter in housing.
Yeah. Yeah.
That's what they say. So if you're a house,
It would matter.
yeah. So that one, I had no clue why it went up like that.
Yeah.
Even in the height of the market in like early 2022, I don't know that it would have sold for that price.
Yeah.
So that was like an outlier, and then
It was
An
a very
anomaly.
weird, yeah.
Yeah.
Everybody was jumping in for it. It was a cute neighborhood, but it was a very, very weird way that things like popped off.
such a nice way to describe
Yeah.
a neighborhood.
Cute.
Like it's cute.
Yeah, like your hair.
Like the way people describe you, Elliot.
The funny thing is I was just about to say that's when Omar Loki doesn't like it,
Yeah.
and then he goes and like, he
No,
likes your
no,
hair.
it's cute. Like I do say it's cute often. Like again, your hair is cute. Can we get a vote on his hair? But yeah, the
He's
market
obsessed
has
with
Omar
hair.
has an obsession
I
with hair,
swear
guys.
it's a fetish.
He's got a
at
hair
this
fetish,
point.
exactly.
Well, I'm surrounded by like weird. Like you guys don't even care.
What do you
Bro,
mean?
just
What's
'cause you
wrong
don't
with her
have-
hair?
like you? I don't even know. I think it's like a full mohawk.
Why does he
And
do
then
that?
you-
bro?
I don't know, man.
It's so crazy.
I don't know.
Yo, I'm
Why are you
sending. I'm
always
sending the
protecting him?
picture because, bro, you're so rude to him.
Why are you
Yeah,
always
he's so
protecting
rude,
him?
so mean.
Because we're
He's
friends.
got like mad scientists.
We're actually gonna.
Yeah.
See, he's not even backing you up. He's not even. Yeah,
okay.
Because it's nice to just have somebody else's hair got ragged on instead of just mine, man.
So I help you out,
Yeah.
but you're gonna laugh at
He,
me.
like, knows you.
Scene.
He
Scene.
threw you in the.
Scene.
I was gonna
All
say
right.
he threw you in the bus, but
Yeah, but you know what it is? When he has long hair, it's not really that much of a go, you know?
Yeah.
There's a picture that I have that I'm going to send to Jawad. I'm going to have him edit
Oh,
it
yeah.
in.
Yes. Yes. I love
Cute, to say the least.
my wedding photo. Yeah, you snooping. Okay, yeah.
I got
so
that video on the
market-
balcony too, my boy. Don't play.
So yeah, so the market went up, and why was the reason that the market went up like that?
So
What
you wanna feel this one, Elliott?
if you want
I-
to share it, we
I
can
just
do
have
it.
a snippet as to why I think the market went up.
Go
is
on.
that we're noticing bond yields are shifting, and with the shift of the bond yields, we're noticing banks are starting to drop fixed interest rates.
Yeah.
And so the fixed interest rates have started to come down, and so I think people are getting more comfortable making that move now
Yeah.
because they're seeing that things hopefully aren't going to keep escalating and increasing in terms of interest rates. So people are getting
Absolutely.
out there.
Absolutely.
Yeah.
And I think I added like kind of layer to that is on top of the expectation is like, okay, now it's not going up anymore as drastically, let's
Yeah.
say. Because like, for example, a couple of days ago, we saw a slight increase.
Yeah.
But
gonna keep
now
going up and
I
down.
just spoke with my mortgage broker today, and he said that is now basically canceled itself out. It's going down again tomorrow.
I see.
So that was very short lived. But
Yeah.
I think on top of it is like, it's not new anymore.
Mhm.
Like people are kind of used to it. They're like, oh well, interest rates are where they are at this point. Like,
And with the
it's not a
prices, it kinda
shock,
makes
right?
sense.
I was gonna say the
Yeah.
prices have come down pretty significantly,
Yeah,
and you've got the ability to negotiate a little bit, which is nice.
I don't know, man. I've seen things sell like 7 days, 5 days on the market. you
But
know?
are they selling above asking or for asking?
No,
They're
pretty much
a little
for
bit-
asking.
Okay.
Maybe
yeah, but
5,
the fact that you're
10K.
Yeah.
competing with a bunch of other people or at least one
Yeah.
other person, it takes away from your negotiating room, right? Like listing agents now, like I'm trying to be like, normal on both ends of the spectrum, but some people are like, they're being tough on the listing side. I'm like, hey, calm down. Literally, you've had 2 years. Just like calm down. Like the first instinct is to like toughen up and try to get like become mean
Yeah.
on that side. But I find that also buyers are just kind of fed up with waiting. And this whole notion of the Armageddon is happening and we're gonna crash and prices are really low and they're gonna go even lower and the rates are gonna keep going up. And my mom said that when she was in the 90s and the 80s, the rates were at 15%. That whole conversation I think is fed up. It's done. Now we've turned into the politics of banking, the politics of bonds, the politics of the Bank of Canada, and to the point where I'm starting to see even like big banks talking out against the Bank of Canada and saying like, hey, which basket are you going to choose this time? Are you going to make any other revisions this time? You know? Because there's a lot of people that are frustrated in the industry with the way that the Bank of Canada is just choosing what is of value for
Like what's important. and
what's important,
not.
to make a decision on cut a rate or stabilize
Like
it.
it's inconsistent.
Super inconsistent. Like when inflation started coming down at one point, the Bank of Canada comes out and goes, oh yeah, no, inflation's coming down, but like we're looking at these other metrics.
Yeah.
Yeah.
And then when those metrics came down, they're like, yeah, but unemployment. And then when unemployment went down, they're like, yeah, but immigration. So
Like they're always looking for
There's-
something.
there's
to
They're
always
keep
looking
it
a-
for a
up.
reason
yeah.
and an excuse.
yeah, so if you just followed what they said by the book, you would never know. Like like your predictions were always. Be
But
wrong.
even the banks are kind of going against it at this point because, like, for a bit the bond yield was just creeping up, and the banks just didn't move their
Exactly. They
rates.
just held
You
their
know what I
rates, right?
mean?
Yeah.
Yeah,
Exactly.
Because
you're
they also
right.
understand that typically real estate is cyclical, and it's the spring market. It's always going to be a little bit busier than the rest
Yeah.
of the year, right? So I think knowing that, and since let's say the last 8 to 10 months has been kind of rather difficult, maybe a little bit less than that, maybe more like 8 months. has been a little bit more quieter in terms of like volume of sales. I think that banks are also trying to make money now. So they're like, okay, well, the expectation is that rates are going to drop. So why don't we just try and be ahead of the curve, which is kind of keeping interest rates at a point where they're not going to move just because the bond yield moves. They're going to try and keep it as much as they can. And some particular lenders, I know for a fact, are saying basically, you know what, typically they're the higher end of the spectrum on rates, but they're saying, you know, bring us something that's realistic and it'll be considered.
So you're saying banks are negotiable now?
Yeah, actually I've seen it. And
like what you're saying there is, hey, offer me something.
The bank is pretty much saying, and listen, like,
I've
I'm
never seen that
because your broker can go to the bank and be like, hey, listen, like, try and negotiate even 0.1, 0.15, something as small as that makes a difference for some people's qualifications.
That's super cool. What I mean? Actually, that's really good to know.
But I think the banks also realize that people's renewals are coming up, and that if they don't do something about the rates and they don't work with people and they're not flexible, people aren't going to be able to either renew their mortgages, or defaults are going to start happening, or whatever, you know, the case is.
Because they're seeing defaults are happening on cars and on lines of credits and on small loans. So if that's the case, then the next one naturally is housing. Yeah, exactly. So they don't want that. But half the population pretty much doesn't have a mortgage. The other half, you know, it's not everybody that's like, you know, fully mortgaged either, right?
Yeah.
And it's not everybody that refinance, but it's still an important portion of the population. I guess the question is, if you're on variable now and you've been on variable for the past 2-3 years, and you've taken it essentially on the chin, like this has been a tough, you know, like it's like in somewhere in the sixes usually for most people in the variables. What do you do now? Do you cancel that and then just sign up for any 5-year 5%?
I think it almost makes more sense to stay.
I would just ride it. Yeah,
okay.
You've weathered the worst of the storm, in my opinion.
Okay, but how fast can this guy drop his rates anyways?
Not as fast as it goes up, I don't think.
No, so you're at 6.3, let's say, for
how far lower is it going to go?
And is he going to drop it by 1% by June?
This year, June?
Yeah.
Okay.
No, he's going to drop 0.25.
Exactly.
0.5. Okay.
Well, I heard they're even pushing. They were saying that they're going to be lowering the rates sooner. Now they're saying pushing and saying July, August isn't going to. We're not going to see the first
predictions.
rate drop. Of course, we don't know for sure.
Knows.
But the point is, they went from saying maybe the beginning of spring the rates are going to start coming down. Now they're pushing till, you know, the end of summer. So who knows?
Okay, but so the point is, if you're at 6.3% and you're going to drop by 0.25 or 0.5 in the summer.
Yeah.
Okay. And then after that, maybe another 0.25 by Christmas or 0.5. So let's call it.
I think they have to go like slow because.
Well, yeah, if they drop drastically, it's going to explode.
Okay, like, but then you're making a point then. If it's 6% that you're at, and right now it's for 5 years, it's 5%. For the 3 years, maybe 5.3.
Yeah.
You get to save at least 1% over the next year. Then the year after, you're saving at least, like you're now break even. So it would take a year of loss for you to be completely break even, but your payments would have been chill.
It just depends on what kind of situation you're in and how much you're hurting, right?
When
did you get into the game? How much is that rate affecting you versus what you can collect in rent? If you're renting, or if it's your primary house. It just depends, right? What's your mortgage at, and how much is that really going to save you? And can you service that difference of interest?
Are you willing to risk the 1 year for the chance that potentially works out in your favor?
Yeah, in the long run.
But okay, so last year, this time last year, I refinanced a few things and I took a 3-year.
Yeah.
But I didn't know that we weren't gonna.
But we had no signs of things getting better.
No, but we thought by end of the year we would have been okay.
Yeah.
And we were doing the calculation that was happening like now.
But your risk tolerance in that situation wasn't high. You didn't want to take a chance. You needed that certainty to a certain extent, and you needed that comfort of knowing that for the next 3 years, this is what it's going to cost you. Whereas some people in some cases might not be as concerned, or on that particular property, what they're collecting on rent or what they're paying on their mortgage versus what it's costing them.
I think some people are probably sick of it too. Like maybe not you particularly, but some people are just like, okay, after that variable increase, 8-9 times in a row. Yeah. Like I'm sick of it. Fuck it. I'll just take a fix at this point and just.
Well, I think that's what they're trying to do, because then they know if you give you a 5-year fix right now, the bank is buying it. They're giving it to you at 5. They're gonna weather the storm, and then they're gonna end up borrowing at like 2% instead of 3% instead of 4%. They're just gonna make good buck on you in the tail end, right? So they're banking on the first year. Maybe I'll make 1% profit, and then I'm gonna make 3% later. So because you're buying at 5% right now.
Yeah, I think the difference in what you pay is probably you'd have to obviously look at exactly what your mortgage is and the term versus the variable, and then run scenarios. Okay, well, if it drops X amount this year and X amount next year, like you would have to run, and you would never actually know, right? Like you would have to wait till it happens to see whether you were right or wrong. But I think the difference in scenarios might not really be that drastic for it to like be the end of the world, you know? Like
I know what you mean.
if you take a loss on your third year, like say your first year you're in a better position, your rate's lower than the variable. The second year you're break even, and the third year like you take a loss in theory. Like the difference, you probably end up averaging those first and last year, you'll probably be relatively the same, maybe plus or minus like $5,000. You know what I mean?
You might actually be better off because your principal payments would have been larger over those first 2 years than staying with your variable and not making any dents to it. So anyways, I think it's definitely worth looking at if you are in that situation. I wouldn't say there's this notion that let's ride the wave. I've already ridden the worst of it.
Yeah.
Let me just continue, and then like let me see you on the flip side. I think there's a proper calculation to be made. If you could grab a sick 2-year rate, oh boy,
that's where the mortgage broker comes in. Like I think that is a place where, or this time right now is probably a time where mortgage brokers will be able to separate themselves from the rest of them
bank
by going above and beyond negotiating deals, this kind of thing,
and strategizing for your clients.
100%.
Guys, like as a mortgage brokers, I think absolutely, Elliott, I agree with you.
And now
this is rare that I agree with.
Shut up, bro. The banks are even trying to steal kind of market share back from the brokers, because I referred a first-time home buyer who had a cosigner, like really good financial position, like in terms of qualifying, and I referred him to my mortgage broker, and the cosigner already had a mortgage with X lender, so the lender themselves offered them a rate that like mortgage brokers couldn't even compete with.
Oh, dope.
like quite literally, like the mortgage broker went, bro, I literally unless I get paid nothing, like I can't
even at that.
And you know what I mean?
So they're going below cost.
Yeah, like giving out.
They're just trying to get business at this point, because the past year it's been tough for everybody.
Volume's
right?
been way down,
exactly. So they're just doing whatever they can.
Around.
They're looking at the volume business. The more business we get, eventually we're gonna hit a break-even point and start making money, rather than having large profits made on each individual transaction that they're doing.
Yeah, exactly. Which I think what we should have done is, because you have a basement, I have a basement.
Yes.
What we should have done is probably create like an app and sell it to the federal government.
Okay.
And then probably made a ton of money.
Yeah, we could have. It took me for a second to kind of clue in on what he's trying to say. Yeah. Well, listen, it's not too late. The liberals are still in power. We can still,
We should do like, instead of like for arrival, we should do like departure camp.
Yes.
Because apparently,
isn't that what Dr. Sharma is doing?
No, he's doing that for
different type of thing, but he's in the app game. You know what I mean?
Yeah.
Maybe apps are it. Maybe
apps are it. How are you going to scale this?
I love appetizers.
It's quite interesting.
Same though.
We're still seeing retail quite strong. I'm seeing a lot of different industries actually quite strong. On the business side, but also on the inflation side, numbers have come down in some drastically, and others like not
at all. Yeah.
It's so I see from a Bank of Canada, but RBC the other day came out. This was on BNN, I think, or something like that. And RBC's like, well, the Bank of Canada's got a buffet of metrics to choose from when deciding to cut rates or not. And that
whatever
just
serves them.
Yeah, exactly. Yeah. Oh, I feel like,
I like
this index too. Or that one. We should go for a buffet after.
We should.
Where do you want to go?
Can you continue your thought?
Sorry.
Well,
Yeah.
this was good. Now you got me thinking. Man,
buffet
now I'm
of
hungry. Now I'm hungry.
The buffet of metrics, Omar. The buffet of metrics.
Yeah, the buffet of metrics. And I think that's what's worrying people is that they can't
There's no
figure out.
predictability.
There's no prediction.
Yeah.
Exactly. And even the smartest minds are not agreeing because,
Well, because it could go either way. It's really what they ultimately decide and how they want to gauge it. Like we
Yeah.
said, the buffet of metrics.
yeah. And then the
You
States,
just like saying that.
Just love talking about buffets.
what kind of buffet? Yeah. All you can eat. So I think that's going to influence a lot of consumer behavior, but at the same time, the consumer is also very fed up with how the process is going and whatnot. And so since there's no predictability on it, the builders, and we've said this before, the builders are also have significantly slowed down their weight in the construction industry. And they've slowed down just any housing starts. What they've picked up though is rentals, but they're not producing as many rentals as they would for sale, right? And they tend to be high rises, so condensed 1-2 bedroom. We're not building the 3-bedroom for the families. We're building for the young professionals. So we keep targeting what's most economical for a building standpoint, but we're not actually targeting what's best for the nation.
Yeah.
Yeah, but even
We're
in
not
the last
addressing the
couple of weeks, builders been. I feel like builders offered a lot of good incentives, like the ones we've been dealing with recently. Like they just started raising the price because it started
Picking
up. Boom, told me, oh, we sold 20 units last week, so we had to raise the price. And then they raised the price on Monday, and then they raised the price on Wednesday, and then they raised the price that following Saturday, and they just like
And it's what, like 5K,
5K
10K?
at a time, 5K
Yeah.
at a time, and they're just playing with it until the demand stops.
But then
And
they'll
for
bring
example,
it back.
this week
Yeah.
they haven't touched it; they've left it, but they're also on top of it incentivizing people to buy.
But it's funny because you guys talk about these incentives. I know like the deals you guys are talking about.
Yeah.
I remember when I was buying my house, like my first one back in like 2011, like that was the average incentive is what they're giving now is like
yeah,
the big incentive. It's just funny to see how it's shifted.
Fucking
Shifts a lot.
2020,
I know.
2021, 2022, they didn't have to incentivize shit. They
Anything,
weren't
exactly.
even paying realtors.
Yeah,
It
So
was,
they
it was just funny because of how it's shifted.
They're
so
like,
much
oh,
over
you want
time.
my house?
Yeah. Well, there's a lineup over there.
Yeah. Actually, so I was talking to David, one of our agents as well, and
You're not supposed to name drop.
Yeah, seriously.
well, he's in the team, so
Unless we talk smack.
we can talk smack about David.
Yeah.
That's fine.
Omar's just gonna call him cute.
Yeah. He's a cute guy.
I was gonna say sensitive, but yeah.
Yeah.
That's fine. So we're having a good conversation yesterday about how Canada's moving. Are you jealous that I was
No,
talking
no,
today?
no.
Wow, I saw the look.
Yeah. It's because he knows you
What?
guys went out for lunch or dinner, didn't
Dinner,
you?
yeah.
Where'd you
Yeah.
guys go?
Peter Bell.
Okay, that's
So
kinda
good.
whack. I would have taken you somewhere better.
These guys said, "Wow."
I don't even know what Peter
You
Bell
know
is,
what the
to be
crazy
honest.
thing is?
No, it's a.
It was my idea because this guy, David calls me. He goes, "Yeah, I'm taking Omar on a date tonight. Like, where should I take
It wasn't
him?"
a date. What the fuck?
It's a cheap date.
And then he was like, "What do I eat? I'm in this area." He's like, Pinecrest.
How do you even know this,
bro?
place?
Because me and David talk regularly.
No, but how do you even know about this spot? Like, that's a super Arabic spot.
My friend's parents own it, actually.
Oh, interesting.
Yeah.
Okay.
Take back everything I said about it.
It was delicious.
Yeah, it's
Yep.
fire. I also had it last night for dinner.
Oh, did you?
Yeah.
We actually I passed out after.
Oh yeah, you have
Like,
to.
legit. Anyway, so we're talking about how Canada is moving into an inheritance culture, and so my argument was a capitalistic argument, and his argument was a socialist argument, or what I labeled him as a socialist argument. So he's of the opinion that, and he's right to a certain extent, that the average person
It
right
actually
now.
pained him to say that.
Yeah, today I'm giving credit. I must be tired. I'm coming down with something because I'm giving you all credit. So what his argument is that the average person that used to buy a townhouse as a first time is now buying a smaller house or a stacked house or a condo, and that number keeps getting smaller and smaller in relative sense. Like, so
at some point they're just gonna be buying mobile homes, and that's about it.
yeah, in order to just become renters.
Yeah.
Right.
So renter society.
So renter society, and just like the older nations, like if you watch Friends or you watch Seinfeld,
Yeah.
okay, in the Friends episode, season 10, the last episode,
Okay,
Monica
that was
and Chandler, okay, the one of the last episodes, but Monica and Chandler, the last episode, literally moved out from that apartment and were moving into their house that they just bought. That was after 10 seasons of, right? And in Manhattan, that's what it is. And in England, that's what it's going to be. And in Egypt,
And wasn't that her aunt's house too, or her aunt's rental
they
that they
bought
just
it.
took over?
No,
No, the rental that they were in, the apartment. That
Oh
they
yeah,
were
that
in.
was her grandma's
It was
place.
her
And it
grandma's
was rent control.
Exactly.
Yeah. So, like, I was thinking about that, and as we're having this debate, I was like, well, like, this is what, from the 90s, right? And that is what large metropolitans are like. If you want to go to Jersey, you could probably buy a house. If you want to go outskirts of Ottawa, you could buy a house. If you want to go outskirts of Toronto, you could buy a house. And that's why a lot of people have moved to Calgary. And that's why a lot of people are like trying to go to Halifax. But you look at those prices now, and you might as well be in a big city. That's not crappy, right?
Yeah, but you just get a lot bigger of a house, and I hate that.
Yeah,
idea,
you get more
but-
value bang for buck in terms
Yeah.
of size.
But like as a younger generation, why does that matter, man? Like why is it? Oh, I'm going
Because Instagram,
because of
exists.
MTV Cribs.
really that's why.
MTV Cribs.
But like to
No.
me, I think living in a condo downtown is way better.
It just depends on what you value. Do you value your location more, or do you value the size and the space of your home?
Okay,
Nah,
but
your
I
lot
want.
size?
I think
I
people-
value social relationships. I want to
Yeah.
make sure that I'm
Yeah,
downtown.
that's because you're a realtor, my boy.
Okay, but even before I was a realtor, when I worked downtown, like the guys, okay, you want to go grab a drink? Okay, fine. If I lived in Barhaven, I'm not at 22 living in Barhaven. I'm not gonna go have a drink and then hop on the bus and then get over
Yeah,
there.
but you know what it is? Okay, I have a first-time home buyer now. Just bought a condo, okay? A new build condo, so it doesn't even close on until next year, okay?
Yeah.
He was telling me that he told his friends, just people around him, people that he thought would be like very proud of him for it, like people that also don't own houses, okay?
Over the judging.
But they go, oh, why would you want to buy one of those? Like it's so small, like like why would you want to live in a condo? Like there's condo fees. Well, to him, he's like, what the fuck? Because like it's a stepping stone. This
Yeah,
guy,
exactly.
I swear to God, because it's actually a thing. Like I think
But
that
your generation's messed
it is.
up.
Yeah.
It's crazy, bro.
Our generation be like, yo, congrats.
Yeah,
That's
good
it.
job.
Because me, I'm helping him through it because like I know that's a good decision for him. You know what I mean? And then he's like, yo, like people actually are hating. Like not everyone. He has some people that are like
Yeah.
very on board, right? But he was very surprised to like realize that like people are actually, and like people are just not as supportive of it. They're like,
That's
oh, why would you
weird.
want to buy a small place like that? Like, wouldn't you
The
want to
thing
buy
is-
a house?
The
like
thing is that I realized too is that some people grew up a certain way in a certain type of home with a certain standard, and so for someone to go out on their own and buy something like a condo when all of their friends lived in nice homes that their parents owned, they never want to regress, quote unquote, and go back
Yeah.
into something smaller because they've got that certain standard. So that they'd rather live in their parents' big home for the rest of their lives until they can
yeah,
buy
that's
something.
fucking crazy.
But
to
that's
me,
what I
man.
mean. I don't disagree. I take that stepping stone. Go buy the townhouse.
Yeah.
Go buy the condo.
Well, he's
Whatever
gonna
you
have
get
his
your foot
own
in the
house
door.
like that,
Yeah.
a lot sooner than
Yeah.
them. They're gonna have to wait till their parents die so they could inherit
Exactly.
the house.
Or they're
but-
gonna go
you
rent
know
the
what I mean?
house. That
Yeah, but
Yeah.
that's
You know
a
what I mean?
terrible
But yeah.
mentality. So you think that this is influenced by social media?
I think it has a part of it, like flex culture. Like people
Yeah.
just want to like show off.
like people just like show their biceps kind of thing?
no,
Oh.
sort of, yeah, but like, bro,
It's when you flex your culture.
yeah,
Yeah.
it's like oh, like
Passively.
Yeah,
Passively.
while you're making income.
Passively. Like-
I hate this guy, bro. I never ask a review for no definition ever, bro. Don't explain
Yeah.
shit to me, my boy.
I got you, baby. I got you.
Okay,
No, but I don't
seriously.
disagree. Like you said, that flex culture, or like you look on social media and everyone's trying to show off what they've got. Look how nice this is. Look how big that is. So that people,
It's actually a thing, man.
Yeah.
It's crazy.
they strive for that, and then if you don't achieve it, or you're not achieving it right at that point, people are going to look down and be like, "Oh, that's all you've got." While meanwhile, the
But-
other
but
guy's
they can't even-
pretending,
Yeah.
but it's all for show, right? They
Yeah.
can show
You're renting a big house, but
Yeah.
he owns a smaller house. You know,
exactly,
like okay, it looks good. Like people would never know you're renting,
exactly.
so it looks to other people like, oh, you have a big house, but in reality, it's not like that. whereas the guy who owns the smaller house owns the house. So like he's
But-
actually way better off.
Yeah.
But like this mentality is so dumb because that's a consumerism mentality.
I don't
Where,
disagree.
where do we live right now?
No, but that's
what
so-
do we do? That's literally what this whole country is just based on at this point.
Listen, man,
So
I want a
nuts.
big house. I want all that stuff. Like, don't get me wrong, but
You want
like,
nicer
I-
hair.
Shut the fuck up, bro. Why does he always do that shit?
Honestly,
You
Omar,
are
you need to
broken-
stop with the hair shots at Elliott. Man. We're gonna have a problem. We're
Yeah.
gonna throw you through that door. We're gonna slide it open
Yeah,
and we're
slide
gonna
it.
throw you down.
You know, threatening is not nice. This is called cyberbullying.
We went over this before. It's not cyber, bro. I'm doing
You're
it to your
in
face.
person.
But when people see it, it'll be on the cyber.
Okay, you made.
We talked about this before, and I was right.
Okay,
Honestly, we
before the
just need
next
to stop
episode,
laughing.
what,
You
well,
know when a kid says things and then you laugh and so they think it's funny, so they
Yeah.
keep doing it. That's basically where we're at with Omar now. He's just gonna start repeating the same shit and then
Yeah.
he's gonna keep
I'm
laughing.
at him now.
It's
so
true. thing is, you don't even have to say nothing. Like he's laughing at his own jokes, so he thinks it's funny. You know what I mean?
So at least that's 1 out of 3 people laughing. That's still good. Okay, let's continue. That was nice. Okay, but it's consumerism. Okay, and so most of these younger generation, and honestly, even when we were younger, it was the same. Most of my friends want to focus on their trips and paying down their OSAP loans and whatever. Okay, they had their own priorities. That was like the 2 main priorities. Okay, it's like go out and pay down your student debt. That was the 2 main priorities after school. But if you're always just focused on that, you're not looking at it from a financial standpoint, you'll never get ahead. You'll never ever skip the line. You'll always just move with the wave. You'll always just move with the sheeps. And that's the dumb part to me, is that somebody's going to go and invest into a condo that's already at good value. I know which one you're talking about. That's
good
fantastic.
value. Yeah, man.
Yeah.
It's really
And
a great
it's
decision.
going to edge this guy up off the bat.
Yeah.
By the time he takes possession, he'll probably be up.
Yeah. So the same model in like a neighborhood that's probably 3-4 kilometers away type of thing.
Yeah.
Like in
Yeah.
Barhaven there. Same model for sale right now for $500K. We got
Okay.
it.
Yeah.
Like
Way
you know what I mean?
20%. Yeah, so it's a completely different game, but a lot of people are just focused on that. And yet your boys or your friends or whatever, because of this flex culture, is going to discourage you from doing something that's really good for you
Mhm.
because it doesn't look as good.
Even though it's brand new, like it's
or
crazy
like,
to me.
no, look as
I
good
also
from
think
an
it's
Instagram.
partially like a jealousy thing because
That's
these people
definitely
get
jealousy.
yeah,
caught,
100%.
people get caught up in it, and
Yeah.
then they're not in the position to go do something like that, so they're gonna like try and shit on it. You know
Yeah.
what I mean?
It's very disappointing. It's
Yeah.
it's too bad. I was explaining this to a group of students, and
Oh yeah, professor.
Why did you
Call
give
him
him that,
professor.
bro?
I
Why did
had
you give
to,
him
I
that?
had to,
No.
I had to.
He-
That way he can stop coming from my hair and go for years again.
go for the kid.
His head's about to grow. We're gonna lose oxygen in this place, bro.
So the example I gave is that one of my best friends and I both received tax rebates in 2008 or 2009. We graduated in 2008. In 2009, we got tax rebates. So I don't know if you know, but when you have university tax credits or college tax credits and you're not working, as soon as you start working, you could use those credits. So they get pushed forward until you start
I'm
working.
hoping that's what's about to save me.
You gotta go to school first.
I was gonna say.
So anyway, so we started working full time, and then so those tax credits came due, and then so we ended up getting like quite a bit, like $7,000, $8,000, something like that each. He put that money towards paying down his debt. I took that money and split it with a friend of mine, and we went and bought a house together. That was very early on. And by doing that, by the time I actually took possession, I was up double my money, if not triple. And so a lot of kids don't actually understand that you're trying to calculate that.
No, I'm just waiting for you to finish so I can agree with you and
Okay,
make
yeah.
another point to it.
That's really weird. Yeah.
Yeah.
But so that a lot of people like this flex.
Is it because it
culture,
was
they-
Valentine's Day? Everybody's just on the same
Oh.
page or something
It's
like
so
that?
weird.
I
Yeah.
don't know.
But a lot of times because of this flex culture, you would have taken this money. So my friend did at least something smart with the money and paid down his debt. I invested the debt. Like I invested that money instead of paying down the debt. So in that scenario, I made a profit. He saved the interest, but a lot of people would have taken that money and gone on vacations, which other friends have done that. And then so they're nor here nor there, and then all of a sudden they just got a bit of a life improvement, but very short lived, right? What were you gonna say?
Well, let me ask you. You took that money and you invested it, right?
Yeah.
So were you not essentially able to pay off that student loan faster in a bigger amount, or could you have not paid off that student loan faster in a bigger amount with the profits you made off of that investment?
Correct.
So
I could have, but I didn't. I
You
only
didn't.
actually paid it off.
you just
last
went and
year.
took a trip
I literally
with the
only
profits you made.
No, because the profits on the house
Yeah.
means that you sold
You
the
have,
house.
you have to sell
yeah.
the house, yeah.
Yeah, but so that's the difference between
But what you were
equity.
willing to do is you were willing to take on and continue taking on that debt to take that money and put it elsewhere,
Yeah,
and profit off of that. And so that's another thing I think is an issue, is that at least for me, I probably you the same. We've had this conversation actually, is that we've got this immigrant mentality where debt is not good.
that is bad. Yeah,
Debt is bad.
we're raised
raised
to
that
say.
way.
Yeah, are you guys raised that way too? Did you?
My
were
dad's
you?
from Egypt, so
Was he?
same
But
thing.
yeah, no, but like because you have your mom's.
From
Not
England.
from Egypt.
No, I was gonna say she's Canadian, but she's from England.
Yes.
Okay, so your mom's British,
Yeah.
and so what's her mentality behind that? Or is she and your
Actually,
dad like on the same page?
like she's okay with that.
She's okay with that. Yeah,
Yeah.
but because culture does affect
Yeah.
it significantly.
Big time.
Till this day, my parents still,
Yeah.
Did you pay off your student loans?
Yeah.
I'm like, yeah, I just did.
Barely.
That's all I care about.
Yeah.
That's it.
Well, it's like, so it's a conversation we had. We were with one of our investor clients, right?
I'm still dying from those cigars.
I know, man. I still reek of it.
You guys are soft, man.
We had double.
Yeah.
Yeah.
Me and the other day,
Uh,
double.
Yeah.
No, I don't want to. I try not to name drop.
Yeah, yeah.
You know?
yeah.
But yeah, we're with that investor client, and they're like, "Yeah, I have like crazy credit," and we're like, "Okay, what have you done with it?" It's like,
Yeah.
"Well, it's just good.
900 credit.
900 credit score," and we're
You
like,
can't even get higher than that, can you?
"No, that's the top of it." But because the whole immigrant mentality was pay everything down, pay everything quickly, make sure you have good credit.
Yeah.
But it's funny because we have that mentality to make sure we have good credit, but then we're not putting our credit to use because we're scared to carry debt.
But it's
And
fun.
then
Yeah.
there's a difference between the good debt and the bad debt.
And what did he say after that, though? He said, "Oh, remember that house?
Yeah.
And this was many moons before us.
Yeah.
I should never have sold that house." Right? And everybody looks back 10 years, 15 years, goes, "Fuck, I should have never sold that house." But at the time, if you're dealing with the 6% today, for instance, a lot of people are hurting. And
Yeah.
you got to be able to manage the cash flow. But it's all about this foresight of to say, can I be able to sum it up somehow?
Can I sacrifice something in my life now to keep
Yeah.
that and then prosper down the road?
But it's
People don't see that.
people sacrifice investments over lifestyle. And I think that's exactly what this flex culture is.
I would agree.
I'm really depressed with this.
Yeah, it's sad, man.
I don't think
It
it was
is.
just that. You came in just unhappy today.
Wow, because you guys are sitting beside me.
But I don't think he was that unhappy. He's giving credit everywhere. That's not a.
yeah, that's weird
Yeah.
though. That is weird though.
Yeah.
When do I ever do
It's
that?
Valentine's Day. His wife.
I guess. I guess. I don't
I gotta
know.
give somebody credit. Maybe Jacob or something.
We love you, Jacob.
Yeah. Yeah, so we want to talk about that, and then also we want to talk about a bit of passive income.
Yeah.
do you wanna explain that to Elliott again?
So when you make income passively.
Okay. I think I got it.
In your sleep.
Yeah.
In my sleep.
Yeah. Okay, so like this podcast, like that's what Jacob was saying, is that this podcast is so viral now that essentially
You know the viewers can check that, right? Like it's like public.
we are in the thousands of views. Well, thank you for your support, actually. I appreciate that. But okay, so this podcast, let's say
Yo,
this
God
is
forbid we actually go viral. Like I don't want to meet Omar when we're
when we're big.
yeah.
Yo,
Like
it
if
would
we
be
get a
so
million
cool.
views on something, this guy,
Yo, his head's gonna be so fucking
Literally.
big. He's not gonna be able to
he's
walk.
like,
through the door.
literally, he's not
Like
gonna
at
be
least
able to
right now
go
he can fold
nowhere.
his ears so he can make it through the door. But if his head gets that big, he won't be able to.
I'll still be able to fold the ears. It's just
Yeah,
not
but
the
the head will just be too big.
Think he'll grow the long hair back? Think he'll get the long hair back
but
and
it
get
was
viral?
it was combed
Oh, it
over,
was so
Yeah,
bad.
Yeah.
that was really bad.
and then
I think he had the
beard.
line on the side too.
I cleaned it. It was like a clean line here. You guys just don't have style.
You broke your hair like here.
You know
off to the
what
side?
swag is, bro?
No,
Something we Arabs
Yeah,
got.
like 2010.
Yeah.
That's what that is.
It's 2015 when I got married. So passive income. Okay, so Rabieh was trying to explain something before he was rudely interrupted.
It's when you make income passively. No, but it's when you're making income off of something that you're not actually.
You're not working
Like Jacob
day to
said
day
while
for-
you're sleeping. It's basically making your money's making money for you. You're not working
Yeah.
day to day. It's
Exactly.
just something you've kind of set in place. You've set it and forget it.
Yeah, absolutely. So a lot of people are looking for that type of investment, a passive income investment. In real estate, you have a few different options, right? You could look for very, very strong income properties. You could look for high growth properties that like go up in value, but maybe lower on the income side or just barely cover.
Like a month-to-month income is what
Month
you
to
mean.
month, yeah. So you either have price
Passively.
appreciation and the value of the property goes up. You either have significant income coming in, but then that in relation to it, the price doesn't go up as much. Or you could just say, I want a mixture of that, or I want one or the other. And you go into different types of investments. There's investment funds on the stock market called REITs. There's private funds that you could do that, you know, in your local city. And then you could go and develop, you could go and invest passively, there's a bunch of different opportunities. But what ends up happening is that a lot of people, they look at their market and then they say, okay, no, I should be making $1,000 or something like that. And per month, however they get their numbers. Then all of a sudden they go, okay, I'm going to go to this place very, very far away and I'm going to make that money. So $1,000, even if you're making $1,000, that's 12 G's per year, right? No. Whereas even if you bought a place for $200,000 and it goes up by 5%, that's $10,000. Plus you would have gone whatever rent on top of that.
Yeah.
And so
So your principal paid down, you would have got the same.
Yeah,
shit.
so you're paid down regardless. And then in your break even, let's say, you still went up 10K. Do you know that 10K on average will get taxed, let's say $2,500, but the 12,000K, the $12,000 will get taxed about $6,000.
Yeah.
A lot of people are focused on that, and they don't realize that their take home
Is actually worse
is
off.
way worse. And I'm talking about already 20% more, and a lot of people just keep looking at the wrong numbers. They just keep looking
And
at
most of the time where you're gonna get like a good return every year in terms of growth, like the price point tends to be a little bit higher than 200K, for example. Like in Ottawa, we're a growth market. Like you're not coming into Ottawa buying and expecting to make $1,000 cash flow.
no.
You know what I mean? Like that's not a thing. But your average property is what, like 670K
Yeah.
on your residential side.
Average is about $601.
What?
$601,000.
Thousand.
Yeah, sorry. I was looking at the numbers last night.
Okay.
That's why we're average at 601 right now.
Is
Okay.
it 601?
I would say residential though.
Yeah, residential. It's just like everything: 1 bedroom, 2 bedroom, 4 bedroom. Like
Everything.
That's residential and
incubation.
condo though.
Yeah, but it's counted.
Together.
Or you mean
Yeah.
just detail, like freehold only.
Oh, you
Yeah,
mean
like,
freehold? No,
that's
it's
what I
just
meant.
like everything.
For the viewership information, he's talking about the clicks that he does in the system. So you guys don't know that, but when he says residential, he means freehold, because it's.
I didn't pick up on that, to be honest. I thought he was asking between commercial and residential.
No, he's
Yeah,
just
like-
he's got the database
Yeah.
in his mind and he's just
He's got
clicking.
the matrix.
Yeah, he's just.
Anyways.
You said anyways, and then you.
Yeah, we thought you had something else.
I was
to
drinking
say.
I just meant move on.
Oh. Let's just move on. Anyway, so $601.
Yeah.
Okay, let's call it 600 flat, right? 5% increase on that is way better than what you're gonna get $1,000.
$30,000. Yeah.
You know what I mean?
Yeah, and the capital gain is way better, right?
Yeah,
Capital gain
even
tax
if
is
you
way better than income tax.
even if you don't like, because to pay capital gain, you got to sell the house, right?
yeah,
Well, you don't sell the house. Even if you were to refinance the next year, take 80% of that out. That's tax free, and you still made more than your $12,000
yeah. So
before tax.
man, okay. So you just got me on a different thought because so unless you own like $100 million or like a significant amount, I don't know how much it is, maybe 50 or something, of stocks, and your stocks are good, they're stable and whatnot. The banks
Oh,
are
you
not
don't
gonna
have
go,
that much?
well, no, not all in one stock. Wait, dollars? Rupees or something. Egyptian pounds. Like easy. So unless you have a significant amount of stocks as a portfolio, banks are not going to lend you against that portfolio to go and buy something else.
With
But
property,
with
at least.
with real estate, it's
It's because
amazing.
it's tangible. If you default on something, they can take it away from you. They can sell it. They can make their money back.
It's
They
gonna
can't do that
take
with
your shit.
stocks.
But they could take your stocks.
Yeah, but the stocks might not be worth anything at that point.
It's 'cause
The
they're
stocks are
so
more volatile.
volatile.
Yeah.
Yeah. So that's why.
Well, that tells you enough right there. The bank is willing to bet that your house is not going to drop in value so quickly that they're going to lose out, right? Whereas with stocks, they're like, yeah, nah, like
Yep.
we'll just.
And then
wait
so
on it.
a lot of people are like, yeah, but I can make more money in stocks. I'm like, how? Please prove it to me. Unless this guy's trading on a usual, like on a daily
basis.
day
Yeah.
trading, like that's his
Oh,
job.
Yeah. Then,
But you're
then,
still
yeah.
risking a lot of money to make. Like you're putting a lot of money on the line to make any kind of return, even if you're day trading.
And when they day trade, they're like looking at 0.5%, 1%, depending on.
Yeah, but the trading thing, like your risk to reward, like you're on a 3-to-1 usually, in terms of like.
Is that what
trading.
they say? 3 to 1?
Yeah, that's like a typical ratio that like you're gonna want to be at. So like your loss is like, let's say $10, but
Yeah.
if your trade hits, it's like $30. So
Yeah.
that averaged out over time, you'll probably end up being in the positive
Sure.
kind of thing.
Yeah. So you have to have a substantial amount of money to trade. You have to have a substantial amount of risk tolerance, and you have to do this on a daily basis. Therefore, it's not passive; it's a job.
You need to be well versed in the stocks and in the graphs. Like I've
Yeah,
I've
but they
had
look
friends.
through it like.
Well,
yeah.
that's the thing. I've had friends who do it. I'm sitting there. I'm looking at these graphs that they're looking at. Like I can't make sense of any of it. At least with real estate, you don't need to have as much knowledge in terms of.
I will
fluctuation and
tell you though
volatility.
that the general rules are actually the exact same. Yeah, like applied to the real estate market as to like a stock market.
But
like
you can't trade real estate like that.
you can. Well,
No,
in
'cause then we don't
theory,
want that
no. It's just
volatility.
on a much bigger scale,
Yeah.
right? Like you're doing it like it takes a lot longer. You can't day trade real estate,
But,
Right.
that's-
but
yeah.
the market principles are the same thing. Both are run on supply demand.
Yeah.
Like both, like it's a market at the end of the day.
Yeah.
Rules apply to markets no matter what market you're in. The problem with real estate is it's just the time frame is like a lot
But,
longer.
yeah, exactly.
But
And
you'll
they're both
see-
heavily affected. They're huge macroeconomic aspects, right? They're big.
If a stock goes up in price like quite drastically, you have what's called a retracement. Okay, that's where the price dips in order to regain buyers that are going to want to go cash in because
Yeah.
they're expecting it to move up again, right? Same thing just happened in
It's
the
the
real
guys
estate
that actually
market.
sold at the top.
Yeah, they're selling to
they're
scare
selling,
people.
and
People
then-
sell, they
and
buy
then-
at the lower
exactly,
price, they
yeah.
come back up, okay? The same general idea just happened in real estate. So we just saw the retracement. Like we were just saying in the fall last year, buy now because now is the time where things are changing and the expectation is that as soon as interest rates drop, now the factors affecting real estate are a little bit different than a market like stocks, obviously.
Yeah.
Like we have other factors like our the interest rate itself, right? Like what people are
Yeah,
borrowing
but that
money
affects
to do.
that affects the stocks as well because the companies are not making as much profit.
Yeah, but it's not
Because
a lot of people
consumers don't have
a lot
money.
of people that are buying stocks are not leveraging. Like they're not borrowing money to put in.
No,
Some-
but even
some
if they
people,
are,
I'm
but
sure
I mean, like
they
they're
are.
buying against the stock, and the stock itself is performing based on what you think it's gonna make. Like if you don't think that company's gonna make any money because the consumers are barely keeping up with their
Yeah,
mortgage, they're not
absolutely.
gonna go buy.
But what I'm saying is that in the real estate, like you literally need to firsthand witness the interest rate.
Yeah, yeah.
Like you're experiencing it for yourself, right?
Yes.
Okay, I want to buy the house. I personally
Yes.
am paying the 5.5, 5.8%, whatever it is, right? So those factors come a little bit more into the
Yeah, I get what you mean.
consumer side of things,
Yeah,
right?
yeah.
But we were telling people, listen, now the expectation is that interest rates are going to drop. We know what's going to happen. We see that the price had dropped to a point where investors were starting to pick things up because they saw the value in properties.
Yeah.
Because we saw that dip from, what was the peak, March 2022.
Yep.
Same thing applies to stocks. Okay, the price goes up, the retracement happens. So now, expecting that we will probably start to be on an upward swing again. Now I don't think it'll be as aggressive as it was before, but the same principle applies to the real estate market as to like a stock market.
Well, I think no, but okay, so it's the same principle, but the supply and demand aspect doesn't really apply for stocks because there is well, it does because there's a finite amount of stocks, right? Like, and the housing
what was
is the
it
same thing.
last year or the year before? Google had to like split their stocks.
Yeah, but they do that to actually bring in more investors,
yeah,
to make it more affordable, more volatile. Like,
yeah,
so it
like
could grow.
like it was unaffordable for the average investor to buy like because one.
They
stock
want people
was,
to buy like a small quantity.
That's
right?
it.
That's
it.
They want
So
a lot of
split.
people to buy.
They turned up the supply.
Yeah, exactly. It just increases your volume. But with real estate, you want people to be able to afford it, but you also want a certain number of people not to, so then you could have higher rents, and so people could start building rentals to incentivize them from doing that. Like, unfortunately,
Who want?
well, like the big developers and there's a certain paradox because the government's going to push the builders to build a lot more. But at the same time, if they build a lot more, then their next one is not as profitable. They're diluting their product. So you really have to incentivize them. You have to give them a significant profit or cheaper rates, or
Like cover the loss that they would experience.
because they're if they flood the market, but even if they wanted to flood the market right now, they can't because buyers are on edge, and well, they've switched a little bit now. But generally speaking, buyers were on edge, and we don't have the labor force to do it. We have tons of labor, just not in the right categories. We keep bringing in doctors and tech guys, let's say, from abroad as part of our immigration policies, but we're not bringing in any like handy skilled workers. And so we need to have more of that, people that are willing to work with their hands, than bring only the brain drain and just bring in like just purely like highly educated people. Like, how many nuclear scientists do we need? How many doctors do we need if we're not even bringing them into the
We need a
system
lot of
anyway?
doctors.
Depends who you ask.
Okay,
We need
okay.
tons of
Bad
doctors,
example.
right?
Yeah. So we need tons of doctors, but they're not even allowing them to enter the
Well,
system.
yeah.
So you're
Our
oh yeah.
system is just broken. That's what it comes down to.
Okay, so we have to fix on a bunch of different things, but there's also a reason why the
Okay,
system.
they can still hear me. They can still hear me.
But there's a reason why also the medical system doesn't want too many doctors to flood the system either, right? Because then their per diems start to go down. It just like it's all about supply and demand. It's all about it.
That's what
But
the market is, my boy.
That's what the market
Isn't
is.
that what Elliott was
So
telling you?
so that's what I was telling David is that at one point you have
We're
to.
back to David.
Yeah, this is how this whole thing started. At one point
Honestly,
you
I
got.
sat here and listened for a while. I didn't even know where any of this was going.
At one point, you have to just realize that government has to move its hand away from the markets and let the markets be. When interest rates are fluctuating from a banking standpoint, it affected the consumer demand on housing, and it affected the consumer demand on lending. So that affected pricing. You don't need government intervention beyond that. So let it be. You don't have to stimulate things. You don't have to do anything. Just let the markets function on their own. If rates go down significantly, people are going to want to buy. If rates like stay stable, rentals might be better for people. So then tons of investors are going to come in and do it. Let the markets fix themselves. And at one point they overcorrect. That's
Is that
my
like
thing.
the balance sheet will balance itself kind of
The
thing?
the budget will
will
balance
balance
itself.
Yeah.
Get
that
it
budget
right,
now.
bro. We've been balanced this whole time, though. Did Rabieh tell you about the chemtrails that he saw? Or no?
That's about. Yeah, chill. You're gonna
I
laugh
don't
and you're
even
gonna
know
talk
what
that
is.
smack and watch a bunch of people are gonna
Yeah.
comment and they're like, "Yo, fuck you. The chemtrails are real."
Yeah.
Yeah.
I don't even know what the hell. Do you know what it is? See, do you know what it is? No.
They do. They just don't
Well,
want to admit it
checks
on
the
camera.
We
right
we
now.
hang out with a lot more people than you think.
Yeah.
that,
Yeah.
you know, I'm just saying.
I've never even heard of that. I guess it's a joke.
Well, then do your research.
I'm
Yeah.
learning so much.
Be
from you
informed.
guys.
You're
Yeah.
ignorant, my boy.
Oh, thank you. Well, this was great. I was gonna.
We know.
I'm being nice today. It's so
Oh,
hard.
shit. Yo, unbutton one of your buttons. Like on your shirt. I fucking hate that shit.
Why you don't like that?
It's too like
You know, I used to
You know
have
what
like
it
a
is?
choker, bro.
Because he's so skinny, bro. We're too thick to be able to button up our buttons.
I
alright?
used to be like this all the time.
Oh
When I
no,
was younger?
bro.
With his hair fucking.
I used to be like
I'm
this.
actually sending Joel the picture. I have to. I have to. And the video of him on his balcony dancing. Have you seen that one?
Yes,
Oh my
absolutely.
god!
Oh, it's
I know which one
amazing.
you're talking about
So good.
French Montana.
Yeah,
Oh, that's a good one.
yeah.
Uh,
It's gonna be a hidden clip. You know,
Thank you.
it's gonna start off as talking about something super interesting and important,
That's
and then it's just
And
gonna
it's gonna
cut.
break off
It's
into
just
Omar
a
dancing.
yeah, Omar
and then
dancing.
we're
love
gonna
it.
clip into how you broke your foot.
I
Can't
wish I
wait.
had,
Yeah.
bro. Okay, so my friends got back from Vietnam, and like obviously like they've been away for a while, right? So they come back, and I'm like, oh, like my foot's in a cast. This guy doesn't say, oh, are you okay? What happened? The guy goes, do you have a video of it? I want to see. Not how to happen. Are you okay?
Yeah.
Like none of that. He's like,
He
you have a
wants-
video?
wants to see
Yeah,
it.
maybe it's not even real. Like maybe you're pretending.
Yeah. You want to hold on? Let me show you.
I don't
want
wanna
to
see.
boy.
But while he's doing that, thank you so much for tuning in. Really appreciate you and your support. I'm talking to Chance and Jacob.
oh my god.
Oh, that's disgusting. Can we
I'll
Zoom
send it to Jawad.
zoom in on that?
I'll send it to Jawad.
Oh, it's
yeah.
disgusting. It's like blue.
Yeah.
You should wash it. I was like, I don't know why
Oh
it
my
looked
God.
like that.
Oh, man.
Again, thank you so much for joining in to another episode of BAM.
Bam.
Brokeassmillionaires. Say BAM.
Bam.
BAM. Thank
Bam.
you.